Welcome to Retail Retold, the stories behind how that store landed in your neighborhood. I'm Chris Ressa, in conversation with the people and stories shaping retail and real estate. Brought to you by DLC. Welcome to Retail Retold, everyone. I'm your host, Chris Ressa, and today I am joined by Josh Suffin, the president of retail services at Retail Stat, formerly known as Credit Intel. Welcome to the show, Josh.
Thanks for having me, Chris.
Yeah, man, it is a pleasure to have you on. So, Josh, tell us a little bit about who you are and what you do.
Sure. So at Retail Stat, I've helped grow our real estate sector of the business, which has been a big growth vehicle for us over the years. It's been a great journey. We've built some great products over time. We've built a great client base over time and used by a tremendous amount of companies within the retail CRE world. And it's been a really exciting and great journey.
You left out that you're a pretty good golfer, Josh. That you like.
I figured we were going to get into that towards the end.
Okay. So, and how long have you been at Retail Stat today?
It's a great question. Full-time perspective, almost 14 years. But I technically started working here part-time when I was 15.
Wow.
Some people don't know that.
Wow.
Yeah.
So tell us about how you got into the space and what the retail services platform at Credit Intel was, and all at retail, what you were doing along the way.
Yeah. So, when my journey really started, the company was significantly different than it is now. We still provide a lot of the same products we provided back then, but to many more client bases than we did. When I got started, we had a handful of real estate clients, and we thought that it was going to be a growth sector of ours. We didn't know how big it was really going to be. We didn't really have a tremendous amount of people internally who understood the CRE world, because outside of CRE, our main client base are major manufacturers who are shipping into stores and extending credit and want to understand our financial analysis and credit analysis of all of these retailers. So they're put into a good spot and not showing up in the bankruptcy courts, as a monster creditor owed a tremendous amount of money. So as we kind of dove into the CRE world, we quickly understood that it's different than what we're used to, but these companies can find a tremendous amount of value in what we do and what we produce. And we started kind of going full force into that area. And that's where I was really put in to see what I could do and see how we can really grow the company. And we did that. We took a little bit of a different approach and we kind of got a little bit lucky. Our business was built off of good product and relationship building before we got to the real estate world. Happened to be that, everybody in retail real estate is also building their networks and building their businesses off of relationship building. So our model kind of jived with the current model within the CRE world. So we started signing up clients. We started hosting events. We started getting everybody together. We started getting our analysts talking to clients. And really quickly, again, clients saw that there was a lot of value and we saw that there was a need for us in the market. And we started investing heavier and we grew a great subscriber base. And from there, we started building other products outside of our financial analysis and credit analysis. So we started getting more into the location world. We created a void analysis tool, and we created a tool called Store Trends that helps track where brands are throughout the country. And we wanted to make it very easy to use for leasing teams. Leasing teams want things immediately. They don't want to click a lot of buttons. So we tried to create these tools that made it very simple for them to get information they need to make their job easier and make money with it. And we continue to grow. Over my time here, I acquired 4 companies with what was Credit Intel, now Retail Stat. All had interesting data sets that we layered onto the business to continue to have it grow. and provide value to clients. And that's our whole goal, right? Our whole goal is we want to provide as much value to clients as possible so we continue to get renewals and we continue to grow our business and grow ARR. And we did a great job of that.
Um, so talking about that, you mentioned relationships. Interesting because Josh and I talk about this a lot, which is in the tech space, and you guys have a software platform that's subscriber based, a lot like other tech companies. It feels in a lot of the tech space, a driver is the core sales strategy isn't always relationship driven. It's, there, and this isn't unique to commercial real estate. This is just in tech right there. How do I raise as much money, put a lot of it into marketing, digitally market to pull people in and scale up that way versus, really laser focused on a singular client, going to dinners and entertaining and doing that. And obviously in the retail real estate, it's definitely a relationship world, and a lot of people drive the businesses based off of relationships. Um, and so there was a good fit, and I think it's definitely unique. Once upon a time, obviously, most sales organizations were driven that way, and obviously over time with you know, uh, outside money coming into spaces and the technological advances, some people have pivoted their go-to-market strategies as it relates to getting things off the ground. So, one of the things that I find interesting about you, Josh, is there's a lot of people who come into and try to either enter in at a real estate company or a retailer or a third party service provider or a vendor. And they struggle at times to get their wits about them around the overall industry and the ins and outs of the day to day of the people making the deals in the industry. And you quickly figured it out, and I think that's a part of that helped you grow the business that you did. Is you mentioned the value you offered. I would say that you really understood a lot of the clients' needs really quickly, and that's a hard thing to do, and I think it's hard, and maybe I'm biased, in our space to do. So how did you ramp up so quickly? I think that would be helpful to the listeners to understand, like, how you got your wits about you in this industry.
Yeah. It's a great question. So, I think I was lucky enough to be put in a couple of situations where I was able to like soak things up like a sponge really quickly. Um, it kind of goes back to the early days, right? Like I've been an entrepreneur forever in my mind and always looking to grow different things. And I've had a lot of amazing mentors over time. Started with my father. My father owned and managed a business where he was selling products into supermarkets. And for him, like, it's a very competitive space. And he used the whole relationship model and building your network model. And like, I watched how he did it as a young kid and learned how to do that. I used to go to trade shows with him and like sit behind the booth and like help out, but like wasn't really helping with much. But I would listen to what was going on there. So like I watched the model at a young age, just kind of lucky being at a good spot of how it's supposed to work. Once I kind of transferred into credit and tell, I met my next amazing mentor, who was the owner of the business, Larry Sarfin. He did an amazing job growing the business and understanding where to invest money. And he gave me the ability to continue to grow and kind of start this whole division that we had. And I sat there like a sponge and soaked up information and started creating friendships and started learning about the business. And luckily, there's a lot of amazing people you and I both know who gave me the time and let me ask questions and let me understand the value that we were providing and what their problems were. Everybody loves to talk about what their problems are. So I listened to what everybody's problems were and figured out how to solve some of those problems and understood the underlying business and how you and everybody that I know makes money and sometimes how you lose money. And I was able to pick it up real quickly because of A, my background, and B, just listening and understanding everyone's problems and being able to discuss them with them. At the same time, I was also kind of lucky because the business that we're in is an information data services company at the end of the day. So I'm able to sit with a lot of our analysts and talk about retail and learn the ins and outs of retail and retailers and what makes them work and what makes them not work. And I kind of became a retail nerd and a data nerd. That was unexpected, but that was a lot of fun. And then you can sit and have real informational conversations with clients and tell them things that they may not know. And that's kind of how everything grew. And I was able to move very quickly from my entrepreneurial background and being able to sit with 20 amazing retail analysts that were right next to me when we were all working together in office. So it was again, it was a really good journey.
Okay. Got it. Super helpful. So let's go to the future for a second. You're a father. Um, and we fast forward 20 years. And your child says to you, Dad, I want to get into retail real estate. Somewhere in the space. You sit down and you sit, and how does the conversation go?
That's a great question. No one's ever asked me that one before. Um, it's a great conversation, I think, because it's as simple as, you know what? If that's what you're really interested in, uh, I'm going to go put you in front of 3 or 4 people that I'm very close with and let them tell you the difficult grind it takes to get to where you want to be. And after those conversations, if you're still pumped about it, we'll put you in the spot to succeed. But no, you're going to have to work from the ground up. You're going to have to be a sponge. You're going to have to understand. It's going to be a lot of brutal days, but it's a great industry and there's a lot of really smart people, and it's a great community.
Is there an area that you might go, yeah, like push your child like a little bit to say, I really want you to look at this area?
Within CRE,
Yeah.
um, that's a great question. You know what, it's sometimes hard to push people in the right direction. You got to see kind of what really resonates with them because you push too hard, then they don't want to do it.
Yeah.
But I found that to be really good at what you do and to provide tremendous value and to help grow and scale, you have to almost touch every piece of the business at one point or another. And like I did that here. Like I started with data entry and all all sorts of positions that are important to a business growing. So I would say that you have to touch all aspects and you have to be put with someone who's willing to allow you to touch all aspects. That's the other thing, right? Like you have to be paired up with the right people who want to see you succeed, who want to put you in a position to succeed and allow you to touch all those different components. And like that was given to me and I was allowed to do all that, which was amazing. I think that was given to you, right? You've touched so many parts of the business at DLC and kind of help, in my opinion, probably help get you to where you are right now. As long as you could do that and you can understand, how the product is made from all aspects, you will succeed uh, for the long term, not short term.
All right. That's a great answer. I'm going to pigeonhole you to one of two. So sits you down and says, "This is I want to get here." There's two options. I can go into CRE,
Mhm.
or I can be a provider to the CRE industry, like a prop tech company or something like that.
It's a good question. Um, I'm going to lean towards the prop tech side of things just because
Your
that's
background.
my background, and I think that it makes you more versatile because I think that if you have the ability to understand what you guys do and you start in prop tech, I think you can transition to your side of the table. I also think that if you start on your side of the table, you can transition into prop tech. So again, it comes down to like if you can understand the aspects of this business, you can see where you can provide the most value. And sometimes like you get started with something and you don't realize that 6 years, 7 years later, you transition to something else that got you there because of where you started. Um, so understanding both sides are going to put you in the ultimate spot to really succeed long term and something that you love because you have to love it,
Yeah.
or else it's difficult to get up every morning.
So we mentioned prop tech. So it feels like, I think to a lot of people I sit around the table, like of other sectors, like tech initiatives in the world, that prop tech is always like a few steps behind, and we're talking about, technology for
Yeah.
properties, a few steps behind, like, other major industries, whether that's, I don't know, healthcare, consumer products, whatever. Like the tech space that services that is always, it feels a few steps behind.
Mm.
Why is that? Is that like just in my head and a couple of my friends, or is that kind of real?
No, it's real. It's definitely real. I think the CRE world is always a little bit slow in adopting newer technologies. I think that the TAM, like the total addressable market for CRE world, is also smaller than a lot of these other markets. So people are going after places where you can sell more. And I think that each asset class within CRE is so specific. So like what we do in retail isn't always easily transferable into industrial and multifamily, et cetera. So you wind up kind of creating these platforms that are very specific for the specific asset class. And it just takes a little bit longer to get everybody to adopt to it. And, you know, real estate is still a touch old school. And to get people to really understand the value and get it into your everyday process takes time. Because at the end of the day, what do you want to do, right? You want to get deals done faster. And like, is the product going to help you do that? Maybe, maybe not. Is the product going to help you with make better deals? Maybe, maybe not. Is it going to help you acquire stronger centers, move away from the centers you shouldn't be acquiring? And the other issue is you have all these data sets, I think, that are kind of siloed. They're not all put together. So then you've got people with 6 or 7 different data subscriptions, and then you need somebody to understand them all and to merge them all together, and it becomes a little bit cumbersome. So, like, if you talk to, like, our peers in the industry, like, in terms of data, like, most people don't have more than, like, 2 or 3 data subscriptions, and, like, we're probably one of them, and there's a couple other people out there. It's small. I think that there will come a time where somebody's going to have one platform that all information gets streamed into, including your proprietary information. And that's going to enable you to make faster and smarter decisions and not have to be so tech focused. Things are going to get pushed to you. And I think AI is going to have a lot to do with that too. But it's going to take time for all of that to come together.
All right. Well, super helpful. You sit in an interesting spot, and sort of change gears for the last part here. The spot you sit in where like you have relationships with all these commercial real estate folks, a lot of retailers, and you sit in a spot where like you're you have analysts that work at your shop and are talking about the ins and outs of retailers every day. So as you take a step back and from your 30,000-foot view, what do you think about the overall market today of retail real estate?
I think that it's in a pretty good spot. I think that we've shaken out some of the brands that were a little bit weaker, recent ones like Big Lots and like Joanne and Party City. Um, and you're going to see a bunch of these other retailers going to pick up a lot of market share now, right? Michael's should become a little stronger than they were before, which is great for them. Um, as we talk about all the time, vacancy is low. You have people fighting for boxes. You have people going to bankruptcy auctions and bidding on boxes. Uh, Tons of them in one package. And I think the sector's in a pretty good spot. It's going to be very interesting to see what happens over the next few years and how a lot of these companies reinvest with new technologies and continue to work on understanding who their customer is. And it's a big question for all retailers. Some know it much better than others, but some are still trying to really figure it out. Customer changes so much, new customers come on board. And being able to make sure that you are still merchandising stores the right way and that you're picking up as many customers as you can, you're not losing them and you're retaining them takes a lot of different data, technology, and merchants. Um, we talk internally all the time about what makes brands succeed and why are brands failing. You look at Party City, right? Like they filed twice in a very short period of time. Joanne twice in a short period of time. Um, Party City, I think that they kind of have a niche, right? There's not a lot of party retailers out there. The only place you're getting Party City type merchandise is going to be Amazon, some online places, plus like Target and Walmart. But I would think that Party City has a deeper merchandising mix than those other brands. Why are they not succeeding? One, I think it comes down to your old school merchants, right? Like if you look at brands that succeeded over time, um, look at like Mickey Drexler and J. Crew and Gap, and like look at what Dick's Sporting Goods is still doing. Like they're still evolving, and Ed Stack's still there coming up with ideas. Um, those brands do well when they have good merchants. When you have some of these other brands that don't have the right merchants in there, who don't really fully understand the customer and are so focused on just figuring out how they're going to pay uh, their debt covenants, uh, it moves away from you're running it as a financial business versus running it as a retailer. And when you're in that, when you have that issue, that's where brands have distressed credit ratings and they're not doing as well. And then they try to hopefully bring in people who can retweet that brand, uh, fix the merchandising mix, bring back customers that they lost, find new customers, partner with the right people online, the right social platforms. And people who are doing all of that do succeed. It's difficult though, because you have to have the money and you have to have the time, right? Party City didn't have the time or the money. Joanne didn't have the time or the money, and they go away. But it is so important to understand who your shopper is and make sure that you retain them and that you're picking up more shoppers. It's a very simple concept. If you think about it, it's just hard to execute on.
For sure. And I couldn't, you know, there's no doubt that, there's a lot of discussion lately on merchants and, bringing back the old school mentality to a lot of retailers about merchants, where it's about the product and the customer and, those unbelievable product pickers who knew that the next trend that was coming and could, and get that to the customer. And obviously those retailers have always succeeded. Been a lot of transition in the retail space from a senior leadership perspective. So I'm curious to see what that does over 2024. That there was a ton. So
Yeah, I'm looking forward to it. I thought some brands picked up some good people who hopefully can help them. Um, it should be a very interesting next 24 months.
awesome. Well, listen, Josh, I really appreciate the time today. This was fantastic. Thank you so much for doing this. I think everyone's going to learn a bunch and have a great rest of the week, man.
You too. Thanks for having me. This was great. This is
Awesome.
actually, and you didn't mention this before, but this is my second time on the show. When you first launched it,
I
we were
remember.
on, but that was how many years ago? 3 years ago?
Oh, way longer. We're doing this since 2019 now.
Kudos to you.
Mm.
It's not easy to continue to come up with content uh,
Yeah.
every single episode. So congrats. This is really great. I listen to the podcast. I know a lot of other people do. It's great for the industry. So
Thanks, man.
congratulations with that.
Appreciate it.
You got
All
it.
right, man. I'll talk to you later.
You got it. Bye.
Hey, Josh, stay on for a second.
Yeah.
Appreciate you watching. Hit subscribe. See you in the next one.